Thanks for joining us. I'm Marlin Bohling with you here on a Monday. And we had a big surge in the market right out of the gate this morning. Why? Well, part of it was because we had a sale of corn to China, and it was pretty significant. It was 1.084 million tons that were sold to China, and 676,000 tons of that total was for the old crop. The rest of it was for new crop delivery. So a pretty sizable amount right there. As a result, the corn market started out very strong, and then it kind of flamed out after about the first 10 minutes or so. Let's see where we now stand. On the corn, we go to the May contract with our quotes provided by bar chart, and you have the May at 744.5. That's 9.5 cents higher. So it sold off, and it's off of its early morning and overnight low by about a dime, but it's off of its high by about 8 cents as well. We have new crop December corn trading at 6.96 1/4. That would be up 8 1/4 cents, and now 8 higher. So we're still hanging in there about 3 cents from its high that was made right at the open here this morning. Now let's switch over to soybeans and see what's going on there. We're higher across the board. Interesting how we're being led higher by the deferred contracts. May is up 16 3/4 at 15.99 1/2. Can't get much closer to 16 bucks without hitting it. It got as high as 16.06. November new crop soybeans at 14.32 1/4 would be within a penny of our high of the day, and we're now 25.5 cents higher in that new crop contract. So let's switch over and see what's going on in our wheat market here this morning. We'll start in Chicago. The May contract 18 3/4 higher at 10.03 1/4, and now you have July gaining 19 3/4 cents so far this morning. In the Kansas City market, you have May now trading 19.5 higher at 10.32 1/2, and July gaining an even 20 cents. Now on spring wheat, we go to the May, we're up 11 3/4 at 10.77, and July up 11 1/4 cents at 10.76 1/2. We are joined by Chris Swift of Swift Trading, based in Nashville here, and always a pleasure to get to visit with Mr. Swift.
Good morning.
Each Monday.
Yeah.
Thank you for coming in.
Yes, sir.
Appreciate that very much.
Always a pleasure.
So a higher start this morning.
Yeah.
But then the market kind of sold off the corn there for a little bit, and it's getting support, I guess, from higher crude oil market, about $4 higher this morning. But it sold off. Now it's trying to claw its way back a little bit. Are you concerned or not? You got to tell me your thought.
No, not concerned.
No, okay, why?
Well, generally we like to always debate what the USDA comes out with on their numbers. And last week, seemingly they came out with some really good numbers that are hard to question. 89.5 million acres of corn, but the grain stock shows a little bit larger increase in the corn stocks that we've got. So seemingly to me, we've got ample plenty of inventory on hand, but later on into the future, we're going to have less and less as we, go through the rest of this year and into next year. And especially if we have any troubles with our corn crop this year, with 2.7 million acres less, we're going to have some difficult times getting through this.
On the screen, Chris, you can see that the market on the May corn, it looks like it had a haircut for about the last month or so. I mean, it had that big rally, and then it's just like a plateau up there. What is that telling you? Isn't that consolidation? Isn't that the definition of it, basically?
Well, and it is, but you've got plenty of old crop on hand. So the May contract being the newest old crop contract month in delivery, there's plenty of that inventory to go around, so it kind of stops, but we made new contract highs in the December and out contract months in all of them in corn.
So when you see a consolidation plateau like that, does that mean a change in direction, or is that just a pause in the market? Apparently, reading between the lines, you think it's more of a pause, right?
Well, there's a division between the two crops. I mean, clearly we have plenty on hand right now, and that may keep it from just bolstering straight up, where we know we're not going to have as much into the future, and it continues to climb. So, in all honesty, it seems to be a fairly fundamentally priced commodity right now, in that we got plenty on hand and not near as much in the future.
Known as fair value, I
There you
guess.
go, fair value. That's
All
it.
right, well, we'll pause right here, and we'll come back and we'll talk about this livestock trade with Chris Swift when we come back. Back with you, and we're talking with Chris Swift here. He's with Swift Trading, based in Nashville. Well, let's take a look at this livestock trade and see how it's holding up in the early going here on a Monday. Well, first of all, on live cattle, it just doesn't get much quieter than this here, Chris. You have the April down 15 cents. We're at 138.50. June flat. Oh, there it's moving. That's a big move. One tick higher, 2.5 cents higher at 135.87. Boy, I don't know if I can take the excitement on this live cattle trade here to get rolling. Feeder cattle market. Well, you have April down 35 cents, and I believe, Chris, do you consider May to have more of the volume now? That's making a bigger move.
Yes, it does.
It's down $1.02 right now at 165.10. So they're definitely picking out that contract month for some reason, and I would imagine that's where most of the focus is right now.
True.
Okay, so we're at 165. That's already $1 and a nickel off of our earlier high this morning. What does that mean?
Well, I think right now we've got the same situation in cattle as what we have in grains. We got plenty of inventory up front, and we've got lots of shortages coming forward. And the one thing that I probably read the most about this weekend is the position that Montana, Wyoming, and the western portions of North and South Dakota almost having to move cattle now. They're just about running out of hay. They don't have enough moisture yet to get the grass growing to be able to hold cattle onto it. So we're very concerned with that portion that maybe within 30 to 35 days, we could see a significant exodus of cows out of that region.
So what does that mean for late summer?
Well, I'm not real sure because we got plenty packing capacity now, and we're just not using 100% of it. So I think it might mean a little bit cheaper beef prices as we go into the spring of the year. If that does happen, we'll have more inventory to slaughter, and we may not have it in the fed cattle market, but if we replace it with cow meat in there, then a lot of people won't ever know the difference.
Let's look at lean hogs. Now, lean hogs are a whole different animal. Sorry to go there, but anyway, lean hogs this morning. The April is down $1.32. But here again, we'll just go out a month or so where there's likely more volume. The May contract down 207 today at 111.10. And look at June down 275 at 117.70. How much trouble is this hog market in, and why?
Probably a little bit of trouble. We got the last hogs and pigs report. It again was down another 2%, and all hogs and pigs kept for breeding. So I think this is probably about the last of them. We've culled down now for almost 2 full years in the hog market. So I have a feeling that if you're going to stop somewhere or another, this might be the place where you stop. So we noticed that on Friday we had a big gap up because of the report showing we had 2%, and then it's been down ever since then.
Well, last week we noted where the deferred contracts had really gained on the spread versus the nearbys, and maybe they're reversing some of that here today. Chris, it's been a pleasure.
Always, sir.
Appreciate
Absolutely.
it. Thanks for stopping by. He just happened to be wandering by the street, stopped in. Chris Swift of Swift Trading here in Nashville. Janet, back to you.